Okay guys, welcome back to our channel. Thanks for tuning into today's video. We're going to talk about Bitcoin today, and we've got a lot to talk about. We'll keep it nice and short and sharp. I really want to discuss the current range that we're in. Before we go ahead and get into it, head over to our Telegram channel, link in the description. You can join our crypto signal channel over here. Updates to all our analysis, a whole range of more information, all our videos, charts, whole range of stuff. And if interested in joining our VIP channel, you can go ahead and contact me directly. All the information about the VIP channel can be found within the free channel here. Let's go ahead and get into it. Now, there's a lot we want to talk about today. We want to talk about the log scale, so the macro. We'll talk about the short term. We'll talk about Bitcoin dominance. We'll talk about the DXY and the total cryptocurrency market cap. We're going to start over here. So the total cryptocurrency market cap, we saw a pretty big drop on this, obviously, as the bear market, came to an end that we assume, and the bear market is still really going, but coming to an end, we predict. We saw a pretty significant drop down. Obviously, the total we saw was about $3 trillion. Which is a huge market cap. Since there, we saw a massive drop from 3 trillion all the way down, 75%, massive, all the way down to 760 billion, where we found the bottom temporarily for Bitcoin here and bounced from. So we see that actually lined up with the total cryptocurrency market cap top of 2017. Very interesting that the 18K level for Bitcoin actually lined up with the top in terms of total market cap, not in terms of price. 18K obviously went a little bit lower, but in terms of total cryptocurrency market cap, we saw that bounce occur when the total currency market cap reached that all-time high. Now, it's a combination of a range of new things. There are obviously many more coins in the market in comparison to what we saw in 2017, but nonetheless, we're going to talk about the bounce. So we saw a short-term bounce for the total cryptocurrency market cap, so Bitcoin, cryptocurrencies, altcoins, whatever. We saw a short-term bounce, and the bounce wasn't insignificant. A 38% bounce in total, 45% to that top. But we're currently getting rejected from this short-term resistance. Now, on the total cryptocurrency market cap, sorry, you can see the short-term resistance by this wick over here. We're struggling to get above it. The next move will occur if we do push above it. We should continue upwards. Otherwise, we can come back down to this level and retest. Now, this is very relevant because we're going to be talking about Bitcoin, and I want to zoom out first and foremost and kind of show you what I mean when I'm talking about this range. Now, a lot of people, and talked about already, this range is stressing a lot of people out. It's quite a confusing range. It's quite a difficult range to understand. The price action is incredibly volatile and is acting in very sporadic waves, ignoring a lot of structures, ignoring a lot of TA, kind of just moving by itself. And it's a testament to the fact that a lot of people in the market right now really are like bull versus bear. It's really this bull versus bear mentality on one side of the coin or on the other side. Half the people think it's going to go up, half the people think we're going to reject it, and then you've got these two strong opposing trading types going against each other. The market's moving up and down between this major support, major resistance, and it's just chaos. But we saw that exact same thing happen in December 2020, okay? This exact same pattern, the exact same volatility, the exact same uncertainty. Everything that we're seeing now has happened before. We are just experiencing it again. Now, that doesn't mean we're going to blow upwards. It doesn't mean that. We could very well go downwards. But what I'm trying to say is this range has proven to be, in history, an incredibly volatile range, also a very important range. But the more important the range is, the more difficulty we're going to have breaking through it. The stronger resistance becomes a stronger support. If we do break through this range, we will see an explosive move upwards, 26,000, 27,000, 28,000. If we don't, we could see a nasty rejection. Now, we saw this happen again over here. We saw volatility, a lot of long wicks, a lot of engulfing candles, a lot of complete candles taking up the entire range, forward winding to where we are now. We're seeing a very similar thing. Okay, a lot of long wicks, a lot of engulfing candles, a lot of up and down action, some fake outs to the top side, to the downside, over and over, a lot of volatility, a lot of uncertainty, and a lot of fear in the market right now for both sides. A lot of people thinking we're just going to moon up, a lot of people think we're going to go down. Now, I've been saying this basically the entire time we're in this range, and obviously we called the bottom. We are not bullish now. Everyone, just take a step back. We are not bullish now. We are very neutral. We were bullish down here. Okay? We were bullish here. So I don't want anyone to comment saying, oh, you're a permabull. I'm not a permabull. We're not bullish right now. We are bullish here. Now, just because I'm not bullish, it doesn't mean I expect the price to crash. It just means I'm open to the idea that we could see a retracement from here, because as long as we remain within this range, it's very hard to tell which way we're going to break until it occurs. Okay, in combination of this, we do have the CPI data coming out on the, I think it's the 8th. I could be wrong. I'll have to double check. I think it might be the 8th or the 10th. One of those two. Someone in the comment section, let me know. I'll double check anyway, but it's one of those, so I just can't quite remember. I've got a lot of stuff on my mind. The 8th or the 10th. Anyway, we have CPI coming out soon. We already know that CPI can bring a lot of volatility into market. And obviously last one we saw CPI brought a lot of volatility into the market. A lot of people were expecting us to crash. We ended up going upwards. Now we did see a short-term crash from the CPI, if you remember correctly. We saw this crash downwards, but eventually we did actually climb back upwards. So we could see the same thing happen again. The CPI numbers come out bad. We could see this crash downwards, a nice buying opportunity for Bitcoin, for cryptocurrencies, and a rally back upwards again. That's something to keep in mind, because it's more likely than not that CPI is going to come back being worse, being higher than 9.1. It's more likely than not that the markets will negatively react to that fact, and we'll see some downswing. I think that is one of the reasons why the price is quite hesitant to go upwards here, because we do have that economic data coming out soon, that economic data that could obviously result in some negative price action. Now, we did talk about this already in yesterday's video, but we're going to talk about it again. Are we macro bullish yet? No, simply no. We're not macro bullish yet. Just because the bottom has been confirmed, and it's been confirmed, and I'll talk about that in a second, was a confirmation of the bottom was a break, a weekly close over 200. Now, obviously, just because we've had that confirmation, it doesn't mean we can't go back down. It just means there's a massively lower probability that we come down and lose this 17,500 level, okay? That is what it means. It means that the probability that if we do come down, there's a lower probability that that drop downwards will continue past 17,500 and create a new level, a new low. It is possible, but it's become increasingly unlikely because we've had that weekly close over 200, okay? Now, obviously, if this weekly candle drops back below the 200 and closes under the 200, it would be a sign of weakness. It would be a sign of weakness. Not only did we get rejected from the 200, from this major resistance zone, but we lost the 200, meaning we lost that strength we temporarily had. Is it a bull trap? No, it's not a bull trap, because we haven't actually broken above that major resistance. If we had broken above the major resistance, went up a little bit and then crashed back down, that would be a bull trap. This is not a bull trap. This is simply pushing into resistance, and that would be a rejection. We haven't gone through the resistance. It would just constitute a single rejection, okay? So keep in mind, even if that happens, guys, we bought 18,000. We're up 34% or whatever it is, 28%. We're happy. We're snug. Doesn't matter what happens. We'll trade the trend. If it goes down, we'll just look for shorts. We'll trade the trend. So let's just zoom out again. Take a look at the short-term Bitcoin here. We've had a crazy price action. We've had, 1, 2, 3, 4, 5, 6 retests of 34,300, 400. I can't read. 24,300, acting as that major trigger for a move potentially back upwards to 23,800. And again, this lower level, 22,800, acting as a major support, being tested on multiple occasions, just bouncing between this little chop zone in the last few days, and that will continue. And I don't think you should be jumping in here looking for longs on Bitcoin, or looking for shorts if you're trying to play the break. So if you're looking for a short to play this breakdown, or you're looking for a long to play the break up, you shouldn't be doing that yet. You should wait for that move to confirm, then you can do it. If you're looking for high leverage longs and shorts to trade, like the the 20-minute, the 30-minute or the hourly charts on these little ranges, sure, you can go ahead and do that. But if you're looking for this bigger, these ultimate decision, these bigger move players, you shouldn't be doing that right now, because we don't really know what's happening in terms of, are we going to break upwards or downwards? All we know right now is we're in a sideways range. We know the validation points. We know the invalidation points. We know the trigger points. We know exactly what to look for to confirm the next moves. We just haven't got those yet. So right now we're just waiting, okay? So don't trade too much. Personally, I haven't been trading too much. I've been posting a couple trades here and there. I've had a couple good trades. We've got one active trade at the moment. We haven't really had a loss yet this month, but we haven't been doing too much trading. Because it's very important to understand that you shouldn't be over trading when you're in these ranges, okay? And I had a VIP member actually ask me a question earlier today, and he said, let me try to remember. He said something along the lines of, when do you know when it's a good trading environment? So when do you know when the environment is favorable to be trading a lot or taking heavier trades? And the simple answer to that is, the best time to be trading is when the trend is clear, or definitive, meaning that when we're between major supports and resistances. This whole zone here was a great time to trade. If you're trying to catch small trades over here, swing trades, terrible. If you're trying to catch trades in here, terrible, okay? Trading within resistance zones is usually where that volatility or that uncertainty is found, and uncertainty isn't good when you're doing technical analysis, because it can invalidate a lot of structures, it can invalidate a lot of charts, we can have price movements in very, very odd ways, breaking upwards from bearish patterns, breaking downwards from bullish patterns, just not really what we want to be doing. So limit your trading in these ranges, because when you want to trade, you have the capital, you can trade in those more clear directions or clear trends. Bitcoin dominance, okay. Bitcoin dominance got rejected. We talked about Bitcoin dominance way back over here. We said we're going to move upwards. We got rejected from here. We moved downwards. We came back. We retested. We're back in the triangle. We're pushing downwards. We're expecting a retest within this range. Of course, if we lose this range, not very good for Bitcoin. We wouldn't like to see that, but it's definitely a potential bounce point. So look out for a bounce between 41.50 and 41%. Obviously, as Bitcoin dominance falls, we see money flowing to altcoins and out of Bitcoin. Now, this is exacerbated if the total cryptocurrency market cap falls. So if we have the total cryptocurrency market cap falling as Bitcoin dominance falls, we see a pretty nasty effect for Bitcoin when Bitcoin crashes a lot in comparison to altcoins. Other way around, if Bitcoin dominance is rising and the total cryptocurrency market cap is rising, we see Bitcoin take the lion's share of the capital. Okay, if the total cryptocurrency market cap, I'm twisting my tongue here, starts to rise and dominance falls, we see altcoins to kind of take that rally away from Bitcoin a little bit. Okay, so watching those levels, watch those charts to understand, how money is flowing. It's really important that you trade with where the majority of money is flowing. Okay, that is about it, guys. That's all I want to talk about. Let me just clear up this chart and we can kind of zoom out a little bit and then talk about a little bit more of the macro, a little bit more of the larger term, and then we'll come back and talk about, what should you be doing now? What can you expect? What you should be looking out for. We'll talk about our triggers, we'll talk about our demands, we'll talk about all that kind of cool stuff. I think that should be enough. I might just delete one or two more things. Okay, I like to keep my charts nice and clear. I don't want to overcomplicate everything here with weird lines. Okay, let's zoom out. So, structure-wise, talked about it yesterday, still in a macro bear market, okay? This whole structure here is our bear market. This whole downtrend here, that is our bear market. As long as we remain between this support area, this resistance area, we are in a downtrend. There's no questions asked. There's nothing to contest. That is the objective fact. We are in a downtrend. Now, the bull market doesn't start once the bottom's in. The uptrend doesn't even start when the bottom's in. The short-term uptrend can start when the bottom's in. Okay, but we need macro reversals, we need midterm reversals, we need macro pattern reversals, and then we need bull market reversals. We've got a lot of stuff coming for us before we start thinking, oh, we're really bearish, we're really bullish over here. All we have done on this channel is tell you, tops in here, that's it. And then we said bottom in over here, okay? That is what we've done in essence. We've obviously told you this is a scam pump, all this kind of stuff, whatever. Done a whole range, we've caught everything in a long way. But in essence, what we're saying is the bottom is in. Now, the bottom doesn't particularly mean that we're going to pump up to the moon from here. It could be a lot of sideways action. We could see a lot of volatility. Hell, we could come back down to this level and retest this level and double bottom. It just means that it's very unlikely now that we lose this level. And if we do lose this level, we do have our lower targets. We'll talk about that later. Nothing to discuss about in this video. We told you already, 12,000, 13,000, 9,000. Those are our lowest targets if we lose that low. But from here, guys, for us to be considered out of that bear market, we would need a break out of these two downtrending diagonal black lines. If we break out of that, we are officially out of the bear market, and that doesn't mean we're in a bull market yet. No, it doesn't. We would need to break 48K to be in a bull market. For us to be in an aggressive uptrend, a macro uptrend, we would need to break above this resistance support level at $36,000 to $37,000. Okay, so out of the bear market here, macro uptrend here, bull market here. Bull market means we likely go to all-time highs. Okay, what we're doing here, all about what we're doing here, is this is our short-term trigger. This is the short-term trigger to confirm the next move up within this macro channel, within this range. The next move up will be up to here. Okay, so all of this resistance range here, this whole effort, this whole bit of commodity, this whole area that we're struggling with here, all it is doing is going to confirm the next move upwards. If we break upwards, and if we break downwards, confirm another move downwards. That's all it's going to do. Okay, that is it today. That's all I want to talk about, guys. I think I'm going to leave it there. If you've got any questions, leave them down below. I highly recommend signing up to Bitget. Trade where I trade, guys. It's where I trade literally on a daily basis. I think it really is the best exchange I've ever used. You'll hear more about it in a second. And of course, if you're interested in VIP trading signals, if you're interested in VIP technical analysis, if you're interested in joining our community, our chat, our group chat, everything you need to trade effectively in this market, you'll have it there in VIP. Okay, and you can find all information in the free channel. Just contact me for more information as well. Okay, guys, I'll catch you tomorrow. Cheers. Okay, guys, we're going to be taking a quick look at Bitget, and now Bitget is where I personally trade. I highly recommend signing up to Bitget with the link down below. Bitget is probably the best exchange out there if you are a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, could name a bunch more, KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want to access the futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign up to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.